Laura Hodges, welcome back to Speaking of Steel for another Market in Minutes episode on the United States steel market. It's great to have you back.
Thanks for having me.
We all know there's been a huge amount of development in the US steel market since the inauguration of President Trump back in January. And in recent months, not least the introduction of new tariffs and threats of ones that have yet to be implemented. Could we start off by just reflecting on how that's affecting steel supply in the market?
Sure, absolutely. I think it's a great way to start. Steel supply at this point should not be a problem or an issue for most U.S. buyers. Utilization rates, as measured by weekly AISI data that we certainly are looking at all the time, has really hovered between 73, 76% since October of last year. This to me signals that there's still a lot of room for the industry to move into, particularly should demand pick up. So there's steel there, and even just to remind everyone, a lot more steel coming online through new investments that have been happening over the last 3 years. So good utilization rates, room to move in, as well as new supply coming online as we speak. Secondly, I think the more the story here is that despite the tariffs and despite the uncertainty that we've heard so much from our research partners over the last couple of months, is that imports have not really pulled back at all. In fact, preliminary data from the Commerce Department shows that imports in March came in close to 2.3 million metric tons. That's about a 15% increase over the recent monthly run rate. So imports are still coming in. I think that's part of the story, but I think what is even more interesting is if you dig into the details, you actually see the countries importing into the United States is starting to shift. That's not necessarily a supply given the reinstatement of the 232 tariffs in March, which effectively leveled the playing field, is what we're hearing about from so many of our research partners. They eliminated the exemptions and product exclusions, and now all countries are subject to the 25% tariff should they bring in steel into the United States. So some of the countries that stood out, Canada. Canada is our largest trading partner for steel, and we started to see that pull back. They're one of the countries that now have a 25% tariff, so no surprise. And in the first quarter, we saw about an 8% decline year over year in their imports. Secondly, in one country that I've been watching pretty closely is Vietnam. And I've been watching it closely just because of the tremendous increase we've really seen over the last year, year and a half, 2 years of their imports coming into the United States. And in the first quarter, it kind of reversed course. It's been kind of building over the last few months, but in the first quarter, we saw a 33% decline in year over year in their imports. Now, if I'm telling you that imports have actually, held pretty steady or even increased in March, there had to have been some countries that have come in to help out that increase. And in fact, there has been. There's been a host of countries that have increased their imports. Two to note are Taiwan and India, not necessarily in the top 5 of importers in the United States, but certainly ones that are growing right now. And in particular, India more than doubled their imports in the first quarter year over year. So there's some movement, and I think something certainly we will be watching here at MEPS, and I advise everyone to really be looking. What we've heard from research partners is that this 232 reinstatement has really leveled the playing field, which has opened up a few more countries than we may not have thought of previously. All this means is that imports aren't declining, and nor do we really expect them to in the near term. So, and what I think is one of the most interesting, I know there's a lot of interesting facts, but the most interesting thing that really happened this week is that one of the executive orders released by the White House effectively issued the first exemption for the 232 tariffs for steel. On Tuesday, April 29th, the administration released an executive order that was really geared towards the automakers, the domestic automakers here, to establish a hierarchy of certain tariffs to prevent the stacking of tariffs, so that they would only be charged once the 25% tariffs. So what did this include? It included, and I'll do it in diminishing order of importance, effectively, which is the auto tariffs, 25% auto and auto parts tariffs, the IEEPA tariffs from Mexico and Canada, which apply 25% if the product is not USMCA compliant, and then the Section 232 tariffs of 25% on steel and aluminum imports. And so what this means is that if an auto producer, domestic auto producer, imports an article, namely a car, into the United States, and it had already been subject to a 25% tariff, like let's say auto parts, or even IEEPA tariffs from Mexico or Canada, then they do not have to pay the 25% tariff on steel and aluminum. So while there has been, some pullback on tariffs, I think that this is the first one that really has impacted the 232 steel and aluminum tariffs. And, it certainly signals that, potentially more exemptions could occur in the future. But that's just speculation at this point.
It does feel like a significant moment, and of course, it depends, I guess, what will benefit US manufacturing. Ultimately, it's a huge sector, isn't it?
Exactly.
So, I mean, along those lines, we've heard an awful lot about the US economy and its current direction in recent days. We've also heard that, discussion of a potential recession. At what level of steel demand is there against that backdrop at the moment?
I think that the latest PMI reports kind of says it all. Released yesterday, S&P Global as well as ISM, the Institute for Supply Management, released their April manufacturing PMI reports, and both of them were not great. After us starting off the year with quite a bit of optimism, the reports, kind of signal that that's faded or even been downgraded quite a bit. For the S&P report, U.S. manufacturing looks like it's sort of in a holding pattern, a neutral zone. It's at the 50 mark for not just April, but also March. And then ISM actually shows the U.S. industry sector in contraction, a slight contraction. But it's below 50, which has been the case not just last month, but the previous month as well. Output, new orders, prices. Output and new orders are down, as well as prices up, which again is not the direction we want this sort of the manufacturing sector to go. And further, in each of those reports, tariffs was mentioned prominently as some of the reasons for the decline. Now, on a separate note, auto sales, which is a key end market for steel, surged in March and even into April. I think they were up 18%, which is a very strong increase for auto sales. But I think, most of the buying was pre-buying ahead of the tariffs, and we don't expect that necessarily. You're really, pulling forward. So you would expect that steel demand or auto sales to not continue in the future months. And then, as you've mentioned, we had the first quarter GDP report that came out this week, which showed an annualized growth rate of a negative 0.3%. This was primarily led by a surge in imports, pre-buying again, and a lower government spending. Now, I'm not necessarily concerned that we are in a recession for a variety of reasons, but I do think that this report signaled a slowdown in the U.S. economy. So I think that the big thing for steel demand and what the industry needs in general is for interest rates to start to come down a little bit lower. Next week, the Fed meets for the third time this year. And there's not an expectation for that to happen. We just had a jobs report released this morning, which showed, it was a good report. Job creation was just under 200,000, unemployment rate at 4.2%. So that's a good thing, not necessarily signaling, interest rate cuts. And then inflation expectations, primarily from tariffs, are up as well. So that combination certainly signals that, the Fed's not going to cut this next time, and probably in the near term. I think that that's really what's needed to have this stronger steel demand to return to the U.S. economy.
Well, I mean, we've talked there about, the dynamic between supply and demand primarily. How does that sort of shape the outlook for the US steel market, and I guess crucially, MEPS' own price forecast as well?
Sure. I mean, so as you know, we assess prices every month, as well as, release a new price forecast. So, to start off where we are with steel prices themselves, last month in April, I would characterize steel prices in general taking a little bit of a breather after a few strong months of price gains. So, for example, hot rolled coil, rebar, wire rod were flat. Prices for those products were flat in April. Cold rolled and galvanized were up a modest $20 a short ton. So, these prices did start to, after hot rolled coil from January to March increased almost 40%. So this is, quite a change from what we've been experiencing more recently. So as for the outlook, we actually have prices continuing that breather or sitting in a holding pattern for the next couple of months, primarily just due to the uncertainty. You just have companies almost, I hate to say the word paralyzed, but companies are sort of they can't plan with this type of uncertainty. And I think that prices are going to sit in this holding pattern for the next, May and into June. I do think, though, that after that, we will start to see prices fall back. We're not going back to where we were in January, or even the second half of last year, but we will start to retreat. And I think that primarily, the primary reason is that the realization that the demand has not really returned. So we have prices for, let's say, hot roll rolling back to from around 900 that they're sitting right now down to $800 a short ton over the summer months. But, you need to keep in mind that that's still about, 15, 20% higher than where we were in January of this year. So despite the tariffs, we will start to see prices fall back. Now, any forecaster is going to have to talk about risk. And, in this environment with all of the uncertainty, I'd have to say that there are some risks to this forecast. But given the fact that I can't imagine this uncertainty is going to calm down, at least over the next 3 months, I would place the risk on the downside, meaning that, while we certainly have our baseline forecast of prices, modestly retreating over the summer months, that they could fall lower than that, particularly for some of the reasons you mentioned, which is, a sharper slowdown in the U.S. economy.
Okay, I'm conscious that sort of brings us to a nice sort of rounded ending, but there's so much going on in the market. Is there anything else that we've perhaps not mentioned that didn't fit into those questions that you might like to add on as a caveat to all that?
There's a lot going on. But I would say, I woke up this morning to see the Federal Register had, that's our government document system here in the United States. And so they had released the inclusion process. So part of the reintroduction or reinstatement of Section 232 tariffs, the product exclusions went away. And the replacement was tariff inclusions. So, there was, I think they had maybe 90 days. The government had 90 days to put together a process with which a steel mill or fabricator, keep in mind that now 232 applies to not just steel products, but also fabricated metal products or steel derived products. And so not every derived steel product was included in their initial pass. So now there is an establishment of a system for steel mills and fabricators and associations related to those two types of companies to submit their request for additional tariffs to be implemented for derived steel products. So it's certainly one to watch, and something. So there's a couple of interesting facts about this. I haven't read it through completely, but there's 3 2-week window periods that producers or manufacturers can submit their request. One of which opened yesterday. So, I think it's in May, maybe January and September. There's 3 windows, 2 weeks only. So if you're interested, certainly take a look at that. And then they have 30 or 60 days to render a judgment. So I would say the one thing is that it's not over for potential products to be included moving forward. Still creates, unfortunately, that word that we are beginning to hate, uncertainty. And there's certainly more to come. So always keep a close eye and tune into us. We will be certainly sitting here monitoring all of these developments closely.
Absolutely. We discuss as much as we can on Speaking of Steel, of course, but
yes.
the main MEPS product is the reviews that we produce, in this case, the International Steel Review, which covers North America. So yeah, we'll implore people to keep an eye on that. But Laura, we'll leave it there. Thanks ever so much for your time. We've covered an awful lot of ground. Really insightful chat. So thanks for joining us again on Speaking of Steel.
Thank you. Bye-bye.
Thanks a lot.